Kitco News special coverage of the PDAC convention is brought to you by Gold Mining and Uranium Energy Corp.
Hello, I'm Michelle Makori. This is Kitco News coming to you from PDAC, the world's biggest mining convention taking place in Toronto, Canada. And I'm thrilled to be joined by Keith Neumeyer. Keith is the CEO and founder of First Majestic Silver and the chairman of First Mining Gold. So nice to have you back with us.
It's great seeing you again, Michelle.
And we were saying that we should lobby PDAC to move the convention to June instead of March.
If they took a vote, I'm sure the vote would be far in favor of leaving it at this time.
Well, as we know, it was rescheduled from March to now due to COVID concerns. COVID seemingly not a really big issue at this year's conference. What are you picking up in terms of sentiment as the biggest concerns for miners right now?
Well, I think it's the market itself. You know, the metals have been under pressure. Gold, it's just recently, but gold's held up extremely well. And we can talk about that a little bit further, but silver has been under a lot of pressure. Copper has broken down, zinc, oil's held up quite interestingly. I think oil and gold are telling us something about the future. But in the meantime, we're all mining companies, and we need the higher prices to really survive in this high inflationary environment.
So, of course, the biggest question that I'm sure you're getting is what we're seeing with the price of silver. It's down about 10% year to date. Gold relatively flat, but not down, unlike most of the market. Gold at around 1.4% year to date. So the big question is, Keith, why is silver down so much?
Silver is a very frustrating metal. I put First Majestic together 19 years ago, and at the time, the supply-demand fundamentals of silver were extremely fantastic, and that's why I put together the company. And back then, we didn't have electric cars nor solar panels to any great degree. Today, we now have two businesses that are absorbing 25% of the mine supply of silver, and these businesses are new businesses. And if you look at what the analysts are talking about, the growth of those two sectors, we could be in a situation over the next 5 to 10 years where these two industries are consuming 50% of the world's supply of silver. And if that doesn't affect price, what will?
But the question is, why are we not seeing it in the price now? It seems like silver is not being seen as a sound money asset, as a safe haven, as an anti-currency debasement inflation play.
Right.
Why not?
I've never looked at silver that way. I look at gold that way. Gold is the granddaddy of all currency, and I would recommend that people have gold in their portfolio, whether that's in the form of physical or mining stocks. Stocks in an environment that we have right now, with the Dow Jones down 500 or 800 points at a time, and I think the Dow's now down something in the order of 25% year to date. So these are big moves. So that's going to affect stock prices in the mining sector as well. But the metals, there is a view that there's a recession coming. Gold's held up, oil's held up, but all the other metals, including silver, have come down quite a lot.
On the industrial case, I see that there is concern that with a recession, we're going to be seeing less demand for silver. But with the World Bank, for example, saying that there's going to be a 1970 style recession, it's going to be difficult to avoid for some countries, slashing its global outlook to 2.9% for 2022. That's down from 4.1% that it had in January. So when we see slowing demand for industrial silver, just how bad do you think that's going to get?
Well, I don't think there's a direct relationship between supply and demand anyways. So, the headlines are the headlines, and headlines do drive price for sure, because the big institutions, the hedge funds read these headlines that you've just read out, and they make their trades according to those headlines. But you can't tell me for a second that the deficit on silver is being reduced in any way. Silver consumption in 2022 is going to be somewhere between 1.1 and 1.4 billion ounces of silver. We'll see that number next year to see exactly what it is. But the minimum estimate is 1.1 billion ounces. The miners are going to produce something in the order of 850 million ounces this year. So that's a deficit of 300 million ounces at a minimum. So we can't have these deficits year after year after year.
So you don't think that a slowing down economy is actually going to translate in a reduced demand for silver?
Not a reduced demand for silver. It could affect the price because, again, you're back to headlines.
Okay. But the demand is still going to be there, and you're quite confident that end of 2022, when the Silver Institute releases its silver statistics, you're going to see an uptick from 2021 in terms of demand and usage.
Yeah, look what the governments are doing. How many governments are now pushing solar panels?
Right.
There's headlines every month of a government trying to reach X amount of output due to solar.
Well, that is one of the factors behind this recession, is that a lot of blame is being put on the war between Russia and Ukraine, which has led to commodity prices soaring, which has led to what some in the Fed blame that for inflation, although there have been a number of other factors, including monetary and fiscal policy. But let's just go with that argument for now. We have had this war, which has led to rising energy prices. On the flip side of that, it's been good in a way because it has accelerated the need for decarbonization, and it has Europe moving away from dependence on Russian oil, moving away from fossil fuels, pushing harder towards clean energy sources. And the EU, for example, saying it has a $300 billion program to end its energy reliance on Russia. And it wants to mandate solar panels on all new homes and commercial buildings. Clearly good for silver in terms of the move away from fossil fuels that this war has pushed. Again, why is this sentiment not being reflected then in the price?
I think groups like the Silver Institute, should actually talk about this issue, because most people, when they talk about ESG or Green New Deal and so on, silver doesn't come up. We hear nickel come up, we hear lithium, zinc to some degree, but I rarely hear people talk about silver and its need in all these technologies. You mentioned earlier about silver being a currency or a hedge against inflation. I think silver is a strategic metal because nothing that we're doing here today could happen without silver, and all these new technologies require silver.
You mean a strategic metal from a national security perspective?
Not so much. I just think as a human perspective. If we're going to electrify our planet in a different way and get off fossil fuel, it's not going to take 10 years like some governments are pushing, or 20 years. It'll take 100 years to do it, to change the electrical grid on a global scale. So, these governments pushing, these programs about, taking themselves off of Russian oil or stopping exploration in the United States or suspending pipelines, this is all craziness, because the technology and industry is not there, and the miners aren't there to supply the metal. So there's a whole trend that has to change in industry to get up to the levels that we're currently using fossil fuels.
Right, and that's been the thesis as to why we do expect silver to eventually catch up with the logic that you're putting out there and rally accordingly. Yet, as you said, it's a frustrating metal, and it stubbornly hasn't done so. Let's talk a little bit more about the industrial demand, because as you said, silver is used everywhere, from electrical appliances to medical devices to televisions to electric vehicles to solar panels. Where do you see the biggest surge coming from in terms of products that require silver?
Well, I think it's electric cars, likely. We have something in the order of 65 million ounces of silver being consumed in the electric car industry right now. And that's at a tune of about 10 million cars a year. So if we're going to be producing enough electric cars to replace the worldwide fleet, there's 1.4 billion automobiles sitting on the surface of the earth right now, of which most of them are fuel combustion cars. So if we're going to replace those cars, we need to produce a lot more electric cars to get there, particularly at the rates that some governments want to see by 2030, by 2040. Some mayors of some cities wanted to remove all fuel combustion cars off their roads by 2030, which is ludicrous. You have a couple million people buying electric cars. Well, there's no manufacturing base large enough to produce that amount of cars. Volkswagen, BMW, Tesla, of course, they're all just starting to produce these cars. So we're probably 5 years away from getting up to the 20, 30, 40 million cars a year that need to be produced to fit that requirement that the governments are pushing. And you do the math, you multiply 65 million ounces by 10 million cars, and you look at the mine supply of only 800 million ounces a year, it doesn't take too long to burn through all the ounces that we're producing.
So the biggest demand you still think is going to come from electric vehicles. How much does jewelry make up in terms of percentage of silver demand?
It's quite well. It depends because it's 15 to 20%, call it, because it changes a little bit.
Well, this may be a precursor to a trend, not entirely sure. See how this develops, but it does seem to be consistent with the whole ESG narrative. We've got Pandora, one of the world's biggest jewelry companies, saying that they're looking at recycling gold and silver into their jewelry, that they will not use any newly mined silver or gold in its jewelry by 2025. What do you make of that?
Well, it's I don't know if it's possible. For one, the recycling business, we're down to around 125 million ounces right now. That reached a peak of 250 million ounces back in 2015 when silver was basically, actually, no, it reached a peak in 2011, pardon me, when silver was at $50, and it's been dropping ever since. So, and during that high-priced environment from 2010 to 2011, most of that silver was coming from households in the form of silverware, old, pots and pans and things like that. All that silver is gone now. It's melted down into bars.
All of it has already been recycled?
Most of it, yeah. So the theory is that in order to get all the silverware back into the recycling industry, you're going to need triple-digit silver, because we've already had that big run up to $50. So any silver that was going to come out has now come out, is my point. So the biggest recyclers are really hospitals, quite frankly. A lot of because a lot of the X-rays are still done with old technology, and that's a big consumer of silver. And there, of course, jewelry itself. There is some junk silver still out there in the form of coins and old U.S. and Canadian coinage. You could buy bags of junk silver on the internet if you really want to go and find it. But it's becoming quite rare. There's junk silver. It's not a huge market.
What about devices, cell phones, computers? Those become obsolete quite quickly. It's too expensive to recycle, you're saying?
Yeah, there's no technology that can do it. I know firsthand because I've invested in a couple of recyclers, and it's a very difficult market to make money.
It's more expensive to extract silver from electronic devices via recycling than to mine fresh silver? Is that what we're saying?
Way more expensive, for sure.
What, really? Okay, what are the more or less cost
it'd be
parameters
interesting
there?
to do an analysis on that.
Yeah.
But I would, because and the pollution you'd be creating as well. And this is one thing that people don't think about. To recycle a solar panel, or to recycle a windmill, or to recycle computers or televisions or cell phones, it's a very polluting system. You have to burn it, or you're gonna have to crush it and use some kind of chemical, acid, or something along those lines. And it's very invasive. And permitting a facility like that is very difficult to do. A lot of those facilities are in China. And even China has stopped taking a lot of computer waste because the world was dumping all this computer waste on China, and China was creating all this pollution as a result of all this waste coming, and they're getting criticized by the world, creating all this pollution, so they shut down all these refineries.
So this notion that recycling silver is actually good for the environment and is more cost effective, you're telling me that's incorrect?
That's right. If it's a ring, then it's one thing. It's easy to melt down and turn it into something else. But if it's embedded in a cell phone, there might be, call it $5, and that's probably an overestimate of silver that's in a cell phone. To take that out, just a little bit of copper in there, there's a tiny amount of gold, some zinc.
Okay, well, it's all part of the whole ESG trend, which is why Pandora is making this move.
Oh, for sure.
And I wanted to get your thoughts on some comments that we've had over the last couple of months about ESG from some prominent people in the industry, because there's growing traction against the movement. Elon Musk, Peter Thiel, basically making the point that while the original intentions perhaps were good, the way that this has spiraled now is actually a very negative, and Elon Musk calling ESG, and I quote, a scam. He says he labeled the practice the devil incarnate. He says it's a scam. In a tweet recently, Peter Thiel saying ESG is a hate factory for naming enemies. He made that comment in a speech at the Bitcoin conference in Miami, where he also said that when you say ESG, you should think CCP, as in Chinese Communist Party. So basically saying that this is a way to create an ideological cartel, that this is a form of oppression, if you will, if I'm interpreting those comments correctly.
Yeah. Well, it's a form of taxation
Sure.
and government control.
Well, that's the point that Peter Thiel is making, is that I guess it's relinquishing too much control to government. There's this notion that it's pseudo virtue signaling, that the agencies that determine ESG compliance, that give ESG credits, that's not sufficiently verified, that's a scam. What's your read on this whole notion of re-looking at ESG?
Well, the miners created ESG. We called it CSR. So I've been in the mining sector for 38 years, and we were financing soccer teams.
CSR meaning?
Community social responsibility.
Okay.
Yeah. So, and we've always been doing that, and we're always very much aware of our responsibilities operating a mine in a remote area, and then we supply everything: the infrastructure, the housing, the electricity, the internet now, not back then, but all the water infrastructure, whatever's required to support that community. Who gets the phone call? Does the government get the call if a water pipe breaks in town? No, the mine gets the call, and we go in there with our equipment and fix the leak, and that's what we do as part of our cost, part of our business, and something I take a lot of pride in. But this whole movement of trying to regulate the use of energy and how we electrify our planet and our homes is quite wrong, because industry has a way of correcting itself, and if governments would just let industry perform, the customer of that industry will decide. So if that particular industry or if that particular company within that industry is doing something inappropriate, it'll be found out, and customers will stop buying products from that company, or employees will quit and leave that business, and that business will likely fail. And that's what the market is all about, and that's how the market should be. And we should not have the government telling industry, not just in the energy sector or the mining sector, how to run our businesses.
All right, well, let's talk about how you run your business. Let's talk about First Majestic now. The stock is down around 27% year to date. It's not pretty, but neither is the rest of the market, to be fair. But it is underperforming the S&P, and it is underperforming silver. Why do you think that is?
Well, underperforming the S&P is an easy one. The S&P's been on a huge rally for 10 years now, and it's just now topping out. It's down, I think, in the order of 20% year to date. So it is cracking, and I look at today's market very similar to what happened in 2000 when the Nasdaq hit 5,000 in March of 2000, and over the next 3 years it was cut by 80%. And it wasn't until 2015, 15 years later, that the Nasdaq actually hit 5,000 again. So and during that 15-year period, that was the big run in the mining stocks. And that's going to happen all over the game. But right now, we're out of favor, for sure. Metals are out of favor, miners are out of favor, and it'll all change. We're going to see a big crack in this market. And you're seeing Bitcoin as well, big crack there. And these kinds of things need to happen, and money will start flowing into the sector again. And just like it in 2002, 2003.
What is going to cause money to flow into the sector again? Sentiment.
That's all it is. Markets are sentiment driven.
And sentiment is fleeting. Market sentiment tends to change. In terms of how you're weathering the storm, though, currently your all-in sustaining costs are between $16.79 to $18.06. Price of silver now at around $21. The margin is getting closer, especially as the price of silver drops, if it does continue this trend. And I imagine costs are getting higher with the inflation for energy and perhaps labor. How do you manage that shrinking margin? Well,
we're a very nimble mining company. I put it together, First Majestic together 19 years ago, and there's been many times where we've had to cut costs. We've run into difficult markets, and you can't finance yourself. So the only solution is to start laying people off, start to reduce exploration programs, start to reduce development programs, and just slow the business down. And this year we have a budget of about $205 million we're spending on those things, property, plant and equipment, exploration, development, and so on. And if metals went sideways dramatically, we would have to make a change.
So you have some cost-cutting measures?
We would have to cost cut. But also, silver is a very volatile price, as we talked about earlier. And, we are fortunate to have gold in our portfolio. So, 50% of our revenue is gold. And gold's held up pretty good. Silver is the one that's really been, causing a little bit of grief.
Yes, you acquired the Jarrett Canyon project, I believe, in 2021. And you say that's making up how much of your revenue at the moment? 50%?
Well, the revenue last year was $530 million US. So that would be in the order, about 25% of that.
Do you see you shifting more to gold in the future?
No, I hope not. It's interesting you asked that because it's easy to buy a gold mine. A month doesn't go by without us getting offered a gold mine somewhere in the world. But getting offered silver mines never happens.
Why do you think that is?
Silver is a lot rarer than people think it is, and that's one of the frustrating things I find about the silver industry is that now people don't talk about its rarity. On a global scale, for every 1 ounce of gold being mined, we're mining 7 ounces of silver, and silver is trading at something like 80 to 1 on a financial ratio, which makes no sense.
So why are you turning down these gold mining projects?
Because people own us because of silver, and we're at 50% silver gold already, and I'd prefer not to see the silver drop below 50%.
So you'd like to maintain silver as the majority of your portfolio?
Yeah, if we could find a good silver mine, I'd be happy.
Are you currently looking at potential future acquisitions?
We're always looking. We've done site visits this year already. We're always kicking the tires on a variety of different assets. We have to.
But nothing you can share with us as of this moment? No. Okay. Well, Keith, the last time we chatted was at the Bank of Montreal conference in February of this year. And it was a few days after the war in Ukraine broke out, after Russia invaded Ukraine. And we saw a spike in silver and in gold right about then. And then since then, well, we've seen what's happened to silver. We've discussed it, and gold has also leveled off. At the time, you and I were discussing how we do not see how this conflict gets resolved. And there was a geopolitical premium priced in to both of these metals. It's no clearer to me now how any of this gets resolved. On the contrary, I think we have a more aggressive Putin in terms of getting his mindset. He's recently compared himself to Peter the Great, who was the Tsar who led the conquest in the 18th century of the Baltic coast. So this is where his mind is at. And he's quoted as saying recently that we need to take back territory and defend itself. We've got the US and UK sending Ukraine long-range missiles, which may change the equation there. Russia's foreign ministry saying it's going to respond to a buildup of NATO forces in Poland with what it says is a proportionate response. We've got think tanks around the world saying that nuclear war is looking more and more likely. The most recent think tank to say this is the Stockholm International Peace Research Institute, saying that the risk of nuclear war is higher today than at any time since the height of the Cold War. And yet it seems to me no one on the market side is really discussing the war so much anymore, with the exception of its impact on energy prices. There seems to be a complacency about this conflict. What is your sense there?
Well, it's not in Europe, because I just came back from Europe, and I spent a lot of time in Switzerland and in the UK, and I can see CNN and the other stations constantly talking about what's happening in the Ukraine. Here it's quite different. You turn on the television and it's all about the US elections. So they're very concerned about what's going to happen in November. Is the government going to change dramatically, and that's where all the energy is going. You saw all the networks covering Pelosi's little charade the other day, which was quite honestly is a bit of a joke.
But in terms of markets, I mean, I get that a lot of the sentiment in market may be driven by media, but in terms of market sentiment, it doesn't seem as though there is much concern baked into how this
you
plays
see
out.
all-time high, well, not quite all-time high, but $123 oil, and $9 or $10 gas. These are reactions to what's going on. We did see inflation spike before the Russian event occurred, and then we saw a further spike, and now we're down from those peaks. So with the war still continuing, which is interesting. So we're going into this kind of in deflationary period now with the war happening. We don't know exactly what's going to happen with food prices because the Ukraine is trying to convince Russia to allow them to get some grain delivered to the West, and they might put a stop to that. I'm just here, haven't heard the conclusion what decision was made there yet. So we could see potentially higher food prices. But metal prices, will turn around ultimately. This is, I think, once we see the Fed back up its current policy, it's going to raise rates at probably 2 or 3 more times this year, and then who knows? I don't have a crystal ball, obviously, but once the market really does crack, is what I'm expecting is going to happen. Then I think you'll see the Fed turn around and start reducing rates, and that's going to be the beginning of the whole next big cycle in gold and silver.
So you think the Fed will raise rates, try and combat inflation to a degree, cause a recession, then panic and start to backpedal by lowering rates, or
I think so. Yeah, I think that's where we're going.
Quantitative easing off before they've even finished or started quantitative tightening in earnest?
The US dollar going up as much as it has been going up is not good for the world, right? And because you've got a lot of US debt out there denominated in dollars, and a lot of this debt's owned by foreign countries and foreign corporations, and their costs are going up. So the world needs to see a lower US dollar, and one of the ways that's going to be accomplished is by lowering rates again.
So that's your forecast, that the Fed goes higher, has no choice, and then backpedals again.
Yeah.
I don't
2018 all over.
And do you have a timeline as to when this may happen?
I think it's probably a Q1 story.
Of this year?
Q4 this year, Q1 next year.
So Q4 of this year, you see the Fed lowering rates already?
Yeah, I do. And they'll probably do it quietly, like just maybe a quarter point.
They can't do it quietly.
Well,
We're all paying attention.
It won't be quietly, but I mean just a small one, just to start the process going. They won't be cutting rates, in my opinion, half a point at a time. And if they did that, then chaos would occur.
But does that to say that you think they'll have inflation under control, or
No, I don't.
By...
No, I think they're going to give up on inflation. I don't think they can get inflation under control, because Volcker did it by taking rates to 20%. I remember that as a much younger person, obviously, but we're not going to see 20% rates. We may see 5%, or we already see 5% mortgage rates in the United States, and housing turnover has dropped substantially over the last couple of months. So, how much can the U.S. consumer afford? 6%, 7% mortgage? What's that going to do to the mortgage rates? But, housing will grind to a halt. And with food prices, energy prices at all-time highs, the government will have no choice.
So by Q4, maybe Q1 of next year, you see the Fed backpedaling on rates, pivoting backwards. What about they're starting to take their quantitative tightening a little bit more seriously now? You think that that's going to reverse and there'll be more quantitative easing by then as well?
Well, they got $9 trillion to deal with.
Yeah.
Well, we'll see how much they can reduce it by. I don't know.
And then you think by Q4, that's when you start to see metals coming back?
I do.
Well, your big prediction, as we know, is triple-digit silver. Mm-hmm. That you're the triple-digit silver man. So I always like to ask you where and when you see that happening and how. Yeah,
it's always, it's. I've been saying it for a long time, and because it just makes sense to me. The supply-demand fundamentals of the metal, the mining ratio. You should divide the gold price by 7 and come up with your silver price, because that's our mining ratio. Whether we'll ever see that, who knows? We should. And we could even get it overshot. It could go to 5-1, who knows? But it shouldn't be where it's trading at. And it's just somewhere along the lines, an article will come out or a headline will come out that some product can't be produced because of silver, the lack of silver, and then everyone's going to wake up to the story and go, oh my goodness, silver is really important. And it is a strategic metal. And we do need a lot of this stuff, to do all the great things that we want to do over the next, 50 years by re-electrifying the planet. And once people wake up to that, once investors wake up to that, you're going to have triple-digit silver. But
before we get to the triple-digit silver, you see a big Fed pivot in Q4. What's your outlook for silver then, end of the year?
Yeah, it's always so difficult short term, but we started the year at 25. You know, I'll call 25 as what we'll end the year at.
Okay, ending the year at 25. All right, we'll end the interview with your 25
okay.
price call for
$1,900 gold, $25 silver.
All right. I always appreciate when guests have the gumption, courage to give an actual price target and a timeline. So thanks for stepping up there.
Okay, we'll email each other on December 31st.
All right, Keith, thank you as always. Appreciate it. Keith Neumeyer.
Thanks for your time.
Kitco News special coverage of the PDAC convention is brought to you by Gold Mining and Uranium Energy Corp.